You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group and co-hosts Uncle Mike TOSAW from St. Charles Wealth Management, Mark the Greasy Meatball Sebastian from OptionPit.com, Andrew the Rock Lobster GIOVINAZZI from OptionPit.com, and Henry the FLOWMASTER SCHWARTZ from CBOE. The Option Block is brought to you by CBOE. When it comes to trading volatility, trust CBOE, the creator of the VIX Index, for in-depth and relevant information. CBOE's tools and services gives you up-to-date trade insights, analysis, and positions of VIX options and futures. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/VIX today to learn more. The views expressed herein are those of the speakers and do not necessarily reflect the views of CBOE Global Markets Incorporated or any of its subsidiaries, collectively CBOE. The information provided is for general education and information purposes only. There are important risks associated with transacting in any of the CBOE products or any of the digital assets discussed here. Before engaging in any transactions in those products or digital assets, it is important for market participants to carefully review the disclosures and disclaimers contained at www.cboe.com/US_disclaimers. These products and digital assets are complex and are suitable only for sophisticated market participants. These products involve the risk of loss, which can be substantial and, depending on the type of product, can exceed the amount of money deposited in establishing the position. Market participants should put at risk only funds they can afford to lose without affecting their lifestyle. And now, get ready to hit the Option Block.
All right, everybody. That music means it is Thursday. It is noon Central. It is 1 p.m. Eastern. You know what's going on in these crazy whipsaw markets we're all living through together? Well, let's find out, because it's time for episode 2 of your bi-weekly options extravaganza, known hither and yon as the Option Block. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the ever-engaging, ever-entertaining, hopefully informative Options Insider Radio Network. Remind me, if you like what you hear, this show, anything else on the network, throw some stars or a like or a comment, whatever it lets you do our way. If you like a visual version of the show with all audio but a static visual image, then you can always check out our YouTube channels. Well, I know a lot of you like to get it that way these days as well. Hey, we don't judge. However you like to get the content, at the end of the day, it's fine with us. And then, of course, if you want to go above and beyond, get more content in your life, including great pro Q&A sessions. We just had one with the last emperor, Mr. Constantine Vlandapulo from Fidelity yesterday, as well as Options Oddities coming up at the end of the week, and a whole bunch more. TheOptionsinsider.com/pro, the place to go to learn more as we go around the horn and see who's joining us today. First, let's go out to a quiet, a sleepy, a tranquil hamlet known as St. Charles, where we are joined once again by the uncleest of Mikes, Mr. Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, welcome back to the program. To you, sir.
Always happy to be here from the sunny, sleepy, hot, tranquil hamlet.
And also joining us, it probably is hot where he is as well. We're all enduring this heat wave together. He is the FLOWMASTER himself, Mr. Henry Schwartz from CBOE, holding down the old CBOE hot seat again this week. Mr. FLOWMASTER, welcome back to the show, sir.
Thank you, Mark. I'm happy to be here. It's totally nice in New York City. It's 73 and a little bit cloudy. We're not having the heat wave here.
Oh, you're not getting all the fun. I guess you saved it all for us then. How nice of you, sir. Triple digits yet again here. And even though I can't really complain, it has been an exceedingly mild summer, at least for us. Weirdly so. 75 to 85 most of the summer, which is weird. So a little bit of triple digits, not the worst thing. We are joined, at least theoretically, we are joined right now by the rockingest of lobsters, Mr. Andrew GIOVINAZZI from OptionPit.com. But there we go. He's having trouble connecting. So I will lead us into the trading block, listeners, and then we'll see if we can get everybody back right now. Here we go.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
You know, it doesn't seem like that's going to work, so we'll see if we can get the rock lobster some other ways, having all sorts of technical issues out there. Welcome to the trading block, listeners, the portion of the show where we break down what the heck is trading out there. And, you know, it's another weird one. I won't quite say a wild one, but an intriguing one. We are coming into the start of the show now. Indexes taking a deeper turn to the red. They tried to rally again, so we're getting, once again, this kind of familiar whipsaw-y session. We got up to right around 44.5 or so in the S&P, and now we're right back down to about 4,400. I briefly dipped below 4,400, got to like 43.98 or so before rallying back. So right around 4,400 right now, off a little over 30 handles, or about 0.7% out there in the S&P right now. The Dow off about similar percent, about 0.62, 0.65, somewhere in that range. NASDAQ off a full percentage point to the dark side. Of course, a lot of people feeling a little bit of that old spookage with Powell and Jackson Hole lurking out there. So that always tends to spook a lot of people out there at the end of the day. Right now we have all of our vol friends. They were looking a lot frothier earlier in the session. We had VIX get to a high of almost 17 this morning, about 1686 or so out there in VIX cash. It has since come off it. It is down to about 16 and a quarter. When we commenced operations here, listeners. That's down a little over a point, about 1 1/3 points from where it was on the Monday show. So we did get a little frothier earlier in the week. Obviously, right now, not so much. Still 16 and a quarter. Nothing to sneeze at when we were at a 12 not too long ago. And also, it is, theoretically at least, the dog days of summer. We're not seeing that from a vol or from a volume perspective. But VVIX 92, down about 6 points. So coming back off of retreating away from that triple-digit level it was at on the Monday show. VXX 2460 down a little over a point, about 1.1 points there. UVXY 1770 down a little over a point, about 1.5 points there. It's SVIX 27.5, so getting back 1.5 points. So UVXY and SVIX doing a bit of the reverse dance out there. And then UVIX at about a 4 even, down about 0.5 point. So a lot of that vol, a lot of that froth we saw injected into the market earlier this week coming out now, even though we are off about 0.75 point again. And then vol Q is at about a 20 even when we kicked off the show, down about 0.15 here on the program. Oh, let me see really quickly. I think we are joined now. Mr. Rock Lobster, are you there? Can you hear me, sir?
I hate Microsoft.
Aha!
I hate it. I don't know what the deal is. It's endless. Endless logging in, logging out, just ridiculous crap for something I do like 4 times a week. I have no clue why it does.
You know, they only spent $8 billion on it. Why would they make it a viable platform? It seems like every update and every iteration they do.
You know
make
what
it
it
worse.
is they want to get me out of my Yahoo Mail account, so they make it because that's what all of my contacts are on that. And they just make it hell until have a Microsoft email account. That's what they're doing.
Well, there you go. I'll tell you what. We will go out of our way to ease some of your umbrage here at the start of the show. We'll be charitable. We'll let you go first, sir. What are you seeing out there in the markets if you can get the rest of your machines to work?
Turn those machines back on. Well, I thought the NVIDIA earnings are pretty good today. I mean, they're growing like crazy, but the stock is, priced for it. But, it's up another, $100 in 2 weeks from the 400 low. So, I mean, I don't know how giddy you get about it, but it seems to be there. The rest of the market, like, again, we've got, we're up, 0.5% this morning, 0.75% maybe. I think we touched almost 445 SPY. And now we're down to 440 SPY, I believe, somewhere around there. SPY, yeah, we're below 440 now, so we're at the lows of the day. I basically think the market has never recovered from the Fitch downgrade. If you look at volatility, that's essentially like the market broke on that day, and it has never gotten quite back its game back on. Tried today to make a little bit of a move on, basically, I guess, the tech part of the economy. And I think a lot of parts of the economy, like my closet theory was, Biden walked into just everybody's basically going back to work. So things should get back to normal. Now, lots of stuff happened, in the meantime, but ultimately, basically the whole world was just getting back to normal, which should have been bullish. And then we had the inflation and this and, whatever reasons everybody comes up for, it doesn't really matter. But that's what we got. So you have that, I think, kind of undercurrent, but now you've got the problem of, all right, well, the banks are sitting on large capital losses of all the bonds they're supposed to hold. But it's not really mark-to-market accounting anymore, I believe. So while they have it, it doesn't matter because they can give it back to the Treasury for full value or something like that. That's what the big move was in March. And then since then, we rallied from that point to 4,600, so close to the at least SPX highs. And then since the downgrade, nothing's been the same. So realized vol is still relatively low. I mean, 30-day vol is 10%. 60-day volatility is 1021. That's average close to close vol of just over 10% for SPX. And now volatility at the money is like up to 14% or so in VIX. So VIX is 16.5. So like the vol's up there, but the market's not doing much. So skew is at relative lows with VIX relatively high because we're not doing anything. So it's kind of where I would say it's not an easy trading environment at all to get into because the market's options are relatively expensive and the market's really not moving. You can catch some moves, I would say, intraday, but there is still, like we said last week, the Sith Lord has yet to reveal himself, and I think it's still, the bond rating agencies keep dropping these little things on, regional banks and stuff like that, and it's not, the market never likes to hear that. And so it would have been nicer if they started dropping this stuff last year when inflation was starting to rip and everybody knew the yields are going up. So, and I think that's where we are. So while there are good pockets, like all markets, there's companies that grow and things that grow, and and AI could be the technology that everybody forgets. 1990, 91, 92 were terrible years in the stock market. Like if you were sitting on the floor back then, Henry or Henry's probably old enough to remember. I don't think you were back there, but it was slow, right? And then all of a sudden, boom, internet came. Like by the end of the decade, everybody forgot. I remember like Krugman wrote a book saying like capitalism is done and the internet will ever be anything. And that was like 92, 94, I think. That was wrong, pretty wrong. Still won the Nobel Prize. But now we have, AI, and you still we have a lot of dislocation. And now everybody realizes, wow, this government spending thing is actually, it's never a thing until it's a thing. So right now it's it's in everybody's ear, but nothing's really happening. But I think that's the drag at this point on stock prices, and the fact that you have, all these other countries are getting together to try to have an alternative currency. So there's going to be less demand for government bonds. Again, pretty big unknown how that's going to turn out. So again, it's not as happy and go bullish when just in the summertime when they fixed the banking crisis and NVIDIA was going to save us all in the AI thing. So I think it's just more kind of just poor sentiment at this point. That's what we got.
All right, and when there's poor sentiment, there's only one place we can go to turn things around. He is our resident ray of sunshine. He is the uncleist of Mikes, Mr. Uncle Mike TOSAW, sir. What is catching your eye out there in a decidedly not Uncle Mike type of day, but I'm sure you can find some rays of optimism somewhere, sir.
You are my sunshine, my only sunshine. Is that what you're going to start singing?
Yes, if I were inclined to sing, that is the first song that would come to mind.
I'm sure it would be. So where we're at right now, just kind of looking at a chart from a technical aspect, I mean, I've been preaching caution for a while now, but just in looking at the SPX, 4,400 is kind of a tough, it's holding up pretty well from a support standpoint. Because we actually, with the 4,400 level, we actually first started playing with it or going through it a couple months ago in June, went below it for a little while, went above it. We kind of stuck with it from mid-June through mid-July. Then we had that run up in July to where we got up to the 4,600 level, and now we're back kind of by the 4,400 level again. So in looking at it, 4,400 is a fairly strong magnet, if you will, for this market. Now, in terms of some other things with which I'm seeing today, I mean, NVIDIA is the big story right now in terms of where everyone's keeping their eyes on, because who knows, NVIDIA could double in a little bit. It could go to zero in a little bit. I mean, I'm more of the school of thought that when you've had this big of a run, nothing against NVIDIA, but when you've had this big of a run, I think it's wise to take a little bit of something off the table in some way, shape, or form. NVIDIA is at a stage now to where I think I was hearing something earlier today that Cisco, the company that I guessed wrong on probably 10 years ago that Mark Longo still likes to mess with me about, Cisco was growing by leaps and bounds going into 2000 in the late 90s. Cisco was a very big company. A lot of people thought that was going to be the first $1 trillion company. I don't believe it ever got there at the time, but a lot of people are comparing Cisco of the late 90s to NVIDIA right now. And there is a lot of there's a lot of reason to make the comparison. I mean, just NVIDIA is a big company. It's not like it's some penny stock. And on the year, we're in the low 100s at the beginning of the year. We cracked the 500 mark in August. It's one thing if that's a penny stock going from $1 to $5, but this is a big company going up almost fourfold, I should say, in less than a year. And I don't care how good the news is. I don't care what the speculation is or anything. I think it makes sense to take a little bit off the table. And I know the headlines this morning were the NVIDIA gains are gone for now. Well, I mean, that might be true, but it's still up on the day. So we'll see where it goes along those lines with NVIDIA. But for right now, I don't care how good it looks, how good it is. When you have a move that great, my opinion, I think it's wise to take at least something off the table, regardless of the situation with which you're in. Now, Andrew hates Microsoft. Well, apparently the market does too today. It's down a little over $4 on the day today. So it's erasing some of the gains with which it had earlier. Microsoft did get a little bit higher, or it did get a little higher on the day. At one point, it was up at 332. Now it's down to 322. So it's like the market giveth and the market taketh away earlier in the day. Now, the same was true with Apple. Apple was above the 181 mark. It's down in the low 178s, high 177s right now. So we are getting a little bit of a sell-off from an earlier pop within this market. So I think overall where we're at, I'm kind of waiting to see how the market reacts once we digest the news of NVIDIA from recent earnings. And so that's where I'm at.
And last but certainly not least, we have the flowiest of masters, the muffler to the machine, the car that is the show. Mr. Flowmaster, it seems like you are inescapable to me these days because I start my day every morning with a briefing from my smart speaker with various news sources all condensed coming at me. So as soon as I open my eyes in the morning, the first thing I hear are the dulcet tones of my smart speaker telling me all these various news snippets. And they've been hitting me a lot lately with snippets coming out of Wall Street Journal about NVIDIA and other things, all driven and powered by CBOE markets data. I open my eyes every morning, sir, and now the first thing I hear is your data being thrown at me. Congratulations, your penetration is now complete. Resistance is futile, sir. Well done.
That's great. I'm happy to hear you. And it's funny, I had a meeting yesterday at a client, a hedge fund, and on my way out, the guy was like, "Hey, are you on podcasts? Because I think I've heard your voice before." And I said, "Yeah, I'm on the Options Insider."
You're starting to get the voice week. Recognition, yes. Not the face, but you will get the voice recognition, yes.
Exactly. The concept of a smart speaker, we actually outlined a business opportunity before we were part of CBOE, where we were going to make an Alexa kind of robo clerk that would yell things out at you like, futures running up 4 points. And, like the June 60 calls that you're short are currently trading on the bid. Do you want to buy them? We didn't actually do it, but I thought the idea was really cool. Especially if you were trading alone. And the problem is if you're trading on like a desk with people, there'd be too much stuff going on. So maybe in the future we'll get around to it. If not, somebody out there can steal the idea and
just call it virtual pit. Bam, there you go. All these home traders, now they feel like they're surrounded by the cacophony of the trading floor, sir.
Exactly. The robo clerk. No, it's funny, like listening to people's views, right? And everybody can talk about the market. We can all do that for hours and hours. It does kind of feel like we've leveled off or kind of gone into more of a sideways mode. Ed Tilley was on Bloomberg yesterday, the CBOE CEO, and they were asking him about VIX activity. And he pretty much said, listen, the market's up 15, 16%. So people now are kind of going into more of a hedging mode. You've got 5 months left. Hopefully people are looking at gains that are comparable, if not better, maybe a little bit worse. But, when the market's up 15%, most people's portfolios hopefully are doing fine. And so, I view this as more of a sideways market, meaning like it's a great time when we get, a few up days to look at, overriding any long positions that you have, just kind of slowly trimming delta, I guess, as we're up there. And then when we get, a couple decent little down days, you close those calls and you start over again. So, depending on your risk tolerance, maybe you sell some puts on the down days, but obviously we're still up around 14%. So I don't know if I'd be out, blasting any downside puts, but it actually just kind of feels like, we're in kind of a normal zone, right? I mean, VIX is 1670-ish. You're not seeing, volume's pretty good, especially for August. We're easily hitting 44 million contracts a day. Some days are busier than that. But, there's also been a decent amount of discussion about dispersion and just really kind of the correlation, right? I mean, we know when things get really hairy, correlation goes to 1, everything goes down together. We're kind of in the opposite end of that now, right? We had the super mega tech leaders bring us up, and they were the only things that were kind of really responsible for a lot of the rally. And then they all kind of started to falter, but you have some of the smaller names catching up. So, and to me, that's how the market's supposed to work, right? I don't love, heavy correlation means you don't have to pick a stock. You just basically pick the futures up or down. I kind of think this is the perfect kind of environment for stock picking, for kind of strategic positions, and kind of, there's opportunity both to the long side and the short side right now. That's what we're seeing. We're seeing, plenty of trades reflect that. And so, I think it's a great market condition.
Great stuff indeed. Let's see if we got some great stuff on the docket today. It is another whipsaw-y day, so that usually tends to lend itself to a little bit of volume out there. Today, not so much. I think the VIX is saying, you know what, I've seen this movie before. I'm gonna catch it on streaming instead. I'm gonna go do something else because VIX is doing a whole heck of a lot of nothing right now. Only 163,000 contracts on the tape. Now, that said, that's the kind of paper I expect in the dog days of summer. So we're kind of just getting back to our seasonal norm. It just seems absurd or outlandish or just bizarre because we have seen so much unexpectedly high volume out there in VIX land of late. The ADV coming in a little bit as well, 743. That's still impressive for this time of year. You could easily expect it to be a couple 100,000 less than that, if not more, in this seasonally quiet period for the markets. But no, threatening 800K. We got Powell about to talk coming out there tomorrow in Jackson Hole. So a lot of things maybe lending themselves to a little bit of potential activity in VIX land. We'll obviously see more tomorrow on vol views, how this week is popping off. SPY, though. SPY loving itself a little bit of the old whipsaw action, probably loving itself a little bit of all the other earnings madness going on out there. Either way, SPY dramatically higher than it normally is this time of day. Again, VIX dramatically lower. Usually we expect at least 250,000 for VIX right about now. SPY, we expect somewhere around 4 to 4.3 million. SPY closing in on 6 million contracts right now, 5.92 million. The ADV also continuing to tick up, almost at 8.3 million. So SPY loving itself another whipsaw-y type of day, putting up some numbers. They haven't even heard of the dog days of summer in SPY land. They're full steam ahead. The S also saying and showing a similar little bit of resilience out there. The S, 1.81 million contracts on the tape right now. I like to do my little check-in on the S. By the way, the ADV and the S listeners, 2.88 million, so that's starting to threaten 3 million again as well. Let's do our quick check-in. Yes, of the top 20 most actives out there in SPX right now, all 20 for 20 are expiring today. That's what I've come to know and love about the SPX, at least in this modern incarnation out there. All 0 day, all the time. Small caps, IWM 420. That may not sound like a lot, but the ADV is 835, so it is well on its way to hitting that today. And the Qs already at 3.21 million. The ADV 3.69 million. So the Qs on the rampage out there today, driven, I'm sure, by a lot of this action out there in some tech name you may or may not have heard of. Let's get out to the most active single names, see what's lighting it up. Is it a banger day on the single name front? And it kind of depends where you look. On the bottom half of our top 10, not so much, only 210,000. That gets you to the artist formerly known as Google, now Alphabet Class A, trading right around 131, a little bit less than that right now, off about $1.50 right now. Good for 210,000 contracts. So the bottom half of our top 10, this time of year, not bad. It's respectable. The top half, crushing it. We'll get there in a second. Number 9, Mr. Uncle Mike just referred to this. Good old softy, 221,000 contracts, off 5.25 now, 1.6%, trading 321 3/4. So giving up a lot of that juice they've gotten over the last, let's see, net on the last month now, they are down 23 1/3, or about almost 7%. I think they topped out at about 351, so almost 30 handles exactly north of where they are right now. Interesting. Let's see, over the last 6 months, though, yeah, they're still up remarkably over the last 6 months, which, again, that AI boom, they were at about 250 in late February, 321, 322 right now. So up about 72, 73 handles from there still. So a long way to go to even get back to where it was back in February, let alone a year ago, which was at about 275 about a year ago as well. So intriguing stuff out there. Again, good for number 9. Number 8, a lot of our frequent offenders here in the bottom half listeners, is the artist formerly known as Facebook. Back below 300, 290.5, $3.78 to the dark side right now. Again, it just seems so nuts that we're looking at a near 300 level here in Facebook. We were joking about the getting run over in the November 200 calls this time a year ago, and see, that seemed absurd, and now here we are. Right back at it, listeners. Number 8, Meta. Number 7, the Amazonians. There's been some talk about Amazon maybe making some of their own chips to steal some of the luster from NVIDIA. But they're still off 2 3/4 today, trading 132 3/4. Good for 337,000 contracts. And the number 7 spot, they're still up in the last month, up a little over $4 over the course of the last month. And year to date, they're up 50%, 47 handles. So a good year for the Amazonians. Number 6, everyone's favorite bargain basement version. They don't make chips, but they're getting a lot of the AI love nonetheless. This is, of course, Palantir. Not feeling the love today, off a full dollar, 6.5%, trading $14.31. Of course, that's still roughly double what it was back in its announcement for not this recent cycle, but the cycle before it, when they were trading around $7.50. So they still have had a nice run there. Over the course of the last month, they're off about $2 exactly, 12%. So maybe some of that near-term bloom coming off the rose. But then again, if you had it from 7 handle, you're pretty happy nonetheless. Good for number 6, 343,000 contracts today. Number 5, back to Ape Land, AMC, 378,000 contracts. Now we're back up. We're getting all this madness out here, listeners. We've got reverse splits, we've got dilution, we've got apes, we've got court decisions, all sorts of madness out here in AMC. But it's good for 378,000 contracts today. And the number 5 spot. Number 4, again, staying in the A-related names, it's the Fruit Company, 577,000 contracts, off 3 1/3, or about 1.8%, trading 177.80 right now. So they are coming for it. You know, the market doesn't like when Apple is red. But even though Apple, only at number 4, only 577,000 contracts. Keeping it in the A names for number 3, it's AMD, outpacing Apple today. That's interesting. AMD, 817,000 contracts on the tape, off nearly $8, trading 101.5. So the other half of the chip zone, they are coming for today. My goodness. Let's see. Over the past month, AMD is off a little over $9. So most of that sell-off is coming today. It's off $8 today, $9 over the past month. Number 2, yes, another rare appearance. Tesla at anything other than the number 1 spot. Number 2, 1.38 million. Still a heck of a lot of volume. Still very respectable. Off 480. A little over 2% right now, trading about 232 even. But that ain't going to do it today, listeners. You probably know what the big dog is today. We talked about it already. It is the AI darling of the street. Just when you think it can't get crazier, it can't get loftier. Just when I think I can't get any more of CBOE and Henry's data in my ears when I wake up in the morning about NVIDIA call skew. Here it is again, 483 3/4, up $12.50. Or 2 3/4%. Of course, they already had lofty expectations, and they blew them away last night, apparently, from all analysis out there. We were joking about the PE when it was around 180, 190, saying this is absurd. Now we're at 251, listeners. PE is a meaningless number. AI clearly trumps PE in this analysis. In this battle of acronyms, you choose AI right now. Good for nearly 2 million contracts today, 1.95 million. So that is, I think, the technical definition of a banger, listeners. We have a banger season on us right now, with the season hanging out at, let's see, where are we? We are hanging out at 101%. So it has come in a little bit. It was at 105 or so recently, down to 101. So that's almost exactly in line with our long-term average, which is about 98%. We shall see. We have 809 names reporting now, so we have a good representative sampling, but not everybody. So we shall see. I kind of thought it would come closer to in line, and that does seem to be the case. So keep an eye on that. That's all fresh, hot off the presses. So if you want to check it out, theoptionsinsider.com is the place to go to learn more. As we go to find out what the FLOWMASTER has on the docket for us today, it is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, let's get to it. Let's get to the weird, the wild, the occasionally whimsical. Let's kick things off in a name that's had a rocking week, rocking couple of days, really. This is Foot Locker, of course, a name that is reporting in earnings season this week. They popped off yesterday. Usually they're Friday names. Interesting to see them on a Wednesday. Ticker symbol FL, listeners. A year ago, they were trading $36.50. So just bear that in mind as we tell you the current levels. They got up to about 47.25. That was in February. February 2nd seemed like it was the apex for a lot of names we talked about here on the show. We talked about June 8th a lot on this show. This year, for whatever reason, February 2nd is the big dog day. And ever since then, they kind of have come for it. They actually managed to hold it to $41 in May. Then on the 17th in May, they fell off a cliff. They went from $41 down to about $24 on June 1st. And then they hung out there for a while until this next leg this week, where apparently, once again, all is not right in the world of Foot Locker. They paused their dividend, cut their outlook. None of those things are things that investors like to hear. So the stock went from about $25 down to $16.60. That was actually the low for the year. It set that actually looks like it hit $15.32 intraday yesterday. So that would actually be the low. And then since then, they've actually managed to rally at about $2 from there into today. It's up about $0.75 today, trading right around $17.40 right now. So a nice little pop today. Mr. Flowmaster, I have an idea what came across your radar in Foot Locker, because it came across our radar as well. But what was catching your eye out there in the land of Foot Locker today, sir?
Well, yeah, this was kind of an exciting one for option traders, right? It's always interesting to see a move where basically the option straddle just had it wrong. And this was the big one. I think that going into earnings, the straddle was around 12%. And then, as you said, it was down 27% following results. So that was a bit of a surprise. I think it was the biggest down move they've had, although I thought some of the other moves were just as bad. So it actually kind of looks like maybe the option. I mean, this one was down 28% this week, but it was also down 27% back in May. So I don't know why it was such a surprise. But what's funny or what's interesting is today what we see is a call buyer. Almost 10,000 of the SEP 20 strike calls. Looks like one buyer. Kind of all happened this morning in like the 25 to 35 cent range in a couple of big sweeps. So it's opening. We know that because it exceeds the open interest. $20 strike on a 17, almost an $18 stock. And these are for September, right? So they're not very far off. Is a bullish bet. It's a bet on a rebound, and stock is up today almost 4%. So I think it actually was even a little bit higher than that. It after they bought the calls, stock ran up to almost $18. Come back now, it's around $17.40. But this to me looks like somebody who maybe they did well on earnings. Maybe they got out of the stock, saw the earnings drop, and now they're basically want to jump right back in. So, there's obviously lots of stories about difficulties in retail and everything else. I don't know. Seems to me like Foot Locker could probably stick around. Cutting the dividend obviously spooks a lot of people, but it might be kind of what they need to hold some cash. So that was the first one. And actually, I'm long a little bit of Foot Locker stock.
Oh,
full transparency.
Slinging the old FL, sir.
Exactly. I am jumping on the coattails. I don't know if he's right or not, he or she. But I'm in for a little bit.
Yeah, they're looking good so far out there. Worth noting, it has been quite the call palooza out there. You mentioned the SEP 20s; those came across our radar. Total of nearly about 14,000 have gone up as of a few minutes ago. We also have about 9,000 of the SEP 18s going up today, and about 7,000 of the AUG 18s. All of that opening today. These are expiring tomorrow, obviously, the AUGs. So it's just a call palooza, listeners. Mr. Rock Lobster, I'm sure even your one eye of the Cyclops must have noticed this very exuberant paper out there in Foot Locker today, sir.
Yeah, you know what? Because we looked at it yesterday, it was down like $7 because they're cutting their dividend and all kinds of. I don't know. It kind of felt like a storied franchise is sort of on there, and then there was Dick's Sporting Goods also reported because I guess they had slippage or some other name for theft or something. They're blaming theft, and the retailing sector lately, and like Dollar Tree reported today, none of it looks great. So, I mean, you can't look at the Foot Locker news and be jazzed. But this customer, let me see, they bought the SEP 20 calls. They paid 20 to 25 cents. So let's see here. Yeah, I mean they're trading about where they were. I don't know if they rolled them or something because there's also a lot of the 18s. But I mean, I don't think this is a terrible purchase. But a lot of these stocks, once they get kind of smeared like this, like buying calls is like the last thing I wanted. I mean, I could see maybe selling some 15 puts or 16 puts or something like that, but like going for the out of the money call just because it's going to make a quick rebound, I think usually that's kind of a hard lift. But I don't know if Henry really did, if he liked this purchase, but it's, although I think the Foot Locker franchise will come back. I think it's going to take it's kind of feeling like Gap stores, something similar where, it was kind of a thing but slowly a kind of declining sales and less retail people going to retail. And that stock is, it's been in Palookaville for like 6 years or 4 years or 3 years or something. So I don't know. It's not buying the out of the money call right now is not my favorite thing to do here.
But they have such cool, swanky referee jerseys, the employees. How could you not want to buy those calls?
They do have that. And I had to honestly say, I never actually been in a Foot Locker that I can remember.
I haven't been in one probably since I was in high school. So it's been quite a while, but I know they still exist in some locations.
They do. And, and it has a storied history. And up until this point, it was, it's been a pretty profitable business, for the most part. But, who knows how much like, Zappos and other things like that. I guess they have Foot Locker online. I would assume. I have no clue. But I'm sure they do. They've got to at this point just to survive, I would think. But anyway, it's again, storied franchise, just, and somebody's lowering that. I just noticed today on Live Vol that they lowered their price target to $30 from $45. So
daring.
Anyway, yeah,
so
just
daring.
Buying calls is, again, not my favorite way to jump, although it does look enticing. But I think maybe they're also, I think they're worried about the economic outlook, and it's hard to discount that, and they used to pay a pretty good dividend. At the current price, it would be about 8% dividend yield, but that dividend is now gone. So it's a big chunk of money out the window that they're not spending. So they're tightening up the reins. So again, I think sadly we have kind of a tale of two economies, or a lot of these Main Street stocks, like you look at, I don't know, like Scott's Miracle-Gro and Generac, CVS recently, like all, a lot of names that I follow, I keep on a list. I'm like, wow, I thought they were pretty cheap, and they're all much cheaper, but people are paying, infinite dollars for NVIDIA and, essentially Microsoft and Apple at this point with them. So I don't know how long that will last, but clearly Foot Locker is they're in kind of the Main Street getting kicked in the teeth camp right now.
Speaking of old economy to new, let's get to the FLOWMASTER's next name. Bringing us a newcomer here. This is Skills Inc., ticker symbol SKLZ. This is an online mobile multiplayer game competition platform for mobile games, iOS, Android, all that kind of fun. Not looking great right now. Off $1 today, trading $8 exactly. On the year, also not looking great. A year ago was trading around $30, and they have come for it. They crushed it actually down to $9 back in December of last year. So they have done this dance already. In fact, from August to December was a terrible period for them. Then they tried to rally it. Once again, guess the day, listeners. February 2nd, it topped out at about $19 again. So they pretty much doubled it from the low. And then ever since then, it's pretty much been slowly meandering back to where it is right now. It hit $7.32 last week. That was the low for the year, and trading $8 and change today. So, yeah, not looking great. Mr. FLOWMASTER, sir, what did your eye of the FLOWMASTER notice out here in our new favorite name, Skills, with a Z?
Well, I want to say I do agree with Andrew that buying the calls, I wouldn't do that trade looking for a quick bounce, but maybe selling the puts because Vol's still a little bit jacked up. or just buying the stock, which is kind of what I did, because then you don't have to worry about the decay. But in skills, this was a funky one. I'd never seen the name before, at least never noticed it. On Monday, we saw a buyer of 1,000 of these first 10 strike calls. It was bigger than average size. I think the average daily volume in there was around a couple of thousand at the time. No, less than that, like 800. It opened, and it's one of these odd blocks. You're like, what are they looking for? And I looked back at the stock price, and it was up 3 days in a row. So they actually were looking okay for about a day until today, right, when we're down, as you said, around 11%. So, I mentioned on a few of your shows, I still think there's a lot of people hunting around for speculative meme style opportunities, and something like this where it's a gaming company to begin with, so maybe the community that really likes to jump into some of these names is familiar with it, might be worth watching. But actually, seeing what it's doing today, it also maybe that opportunity flew by.
Yeah, not looking great out there today. Mr. Rock Lobster, sir, has everyone's new favorite name, Skills with a Z, come across your radar? And what do you think of these SEP 10 calls expiring next week, sir?
I have to say it does feel like a bridge too far at this point. Mostly because they're trading for 6 cents right now. But I think folks were betting on some NVIDIA good feelings and like tech, whatever, gaming, all of the above, anything even remotely close to AI. And just not it hasn't happened. Let's just say it's not happening today on these calls because they're trading around 6 cents. So that's a rough one currently.
That it is. Let's see. It's a rough one in a name. This is the name we haven't talked about in forever. Used to be a hot name. It's right down the street here. You think we talk about it more, but for whatever reason, it has completely gone off our radar until today when the FLOWMASTER brought it back. This is Groupon. When's the last time you talked about or thought about or used Groupon? Hey, maybe you're a hardcore Grouponer. I don't know, listeners, but it does seem like they are in an interesting time right now. Groupon, at ticker symbol GRPN, up a half a buck today, trading $12.30. This one's been on quite the rampage of late. A year ago it was 10 1/4. They rallied it all the way up to about $12, $12.20 or so. Then they pretty much came for it the entirety of the rest of this year until May. In May, it got down to $2.89 on May 16th. So they just annihilated this thing. And then since then, it's been on the warpath to the upside. Looks like they have a new CEO. He just came out and bought 437,000 shares. That caused the stock to rally 20%. It's been quite the saga since May 16th. This thing rallying hard, including back, on August 10th, it popped from 760 all the way up to 11 3/4. And now it's trading 12.30. So again, this share purchases, some other obviously good news out here in Groupon land, and maybe a little bit of the old meme stock Squeezy McSqueezerstein love as well. All of it combining for quite the impressive couple of months out here in Groupon. Mr. FLOWMASTER, sir, what did your eye of the FLOWMASTER find? And one of our old favorites maybe making a comeback. This is Groupon.
Yeah, this one was, I don't know if you have this button on your option alert or not, but I have one that it looks for stocks that are up where volatility is up more than a point or two. Because those are kind of the unusual situations, right? Usually, vol starts to spike when things go down. But so this one showed up, and then I kind of dug into the amount of volume. I have to agree. I mean, this is a stock that everybody knew what Groupon was when it came out 5 years ago, and people even used them. But I don't know when the last time I tried to use a Groupon was. But so what we're seeing today is almost 40,000 calls and about 15,000 puts. So that's 5 times normal volume. And it's nothing specifically. There was one big trade. It looks like a spread being adjusted. So the January 10-20 call spread traded, and then the January 15-25 call spread traded. And looking at the existing positions, I believe they were long the 10-20 call spread And as you said, the stock's been on a tear, so they did well on that. I think they're unwinding that and getting into the 15-quarter call spread, staying with January, basically reloading along that they've made some money in, taking some money off the table. At the same time, I think that they actually sized up the position a little bit. I think the 10-20 traded for $3, and the 15-quarter traded around $2.15 or so. But so, like, people may, when you see somebody make money on a position, which is what this looks like, one of the smart adages is you want to ride your longs forever. And so seeing somebody adjust it and kind of reload is a very positive sign. I don't know what the fundamentals on the stock are at all, but maybe the new CEO is going to come up with new plans or something. But that's what it looks like to me. But then the other funny thing is that there's also the other kind of contracts with most of the volume is the 3-strike calendar from June to Jan. So, from Jan to June, meaning what it looks like is somebody has some 3-strike puts that expire in January. They're adding 6 months to it. But, for pretty decent size, 3,000 or 4,000 contracts out there. Kind of a weird hedge, $3 strike on a $12 stock, but that's what it seems to be. And I'm not sure why they wouldn't have adjusted the strike on that to give it a little bit more meat, but that's what it seems to be. So I thought that was very odd and fitting for the odd block.
Very odd indeed. And we have to keep on rolling, listeners. It is now time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
Oh, no, Uncle Mike. Did we lose you, sir? Are you muted?
I can hear you now. I did not have sound for a little bit.
All right, go for it.
All right, so in terms of around the block, what I'll be watching, Apple right now is camped out at this 180 level, kind of. 180 acted as a point of resistance early in 2022, and it's kind of acting as a point of support right now. So I mean, just definitely watching Apple over the next few days, seeing where that goes. And then Microsoft appears to be having a little bit of a bottom around like the 320 level. So watching that as well, and continuing to watch 4,400 on the SPX. And
what's your vote? What do you think our audience is voting for in our poll?
Didn't hear it because you had no sound for a minute. So I'll say choice C.
Choice C. Okay. Mr. Flowmaster, same question for you, sir. What is your vote in our poll? What do you think our audience is voting for? And then C, what are you keeping an eye on for the rest of the week until you and I do a live show at the CBOE next week?
Yes, next week we'll be live. I also didn't hear what the poll is, but I'm going to go with A because I'm pretty confident that that's the answer. I mean, there's a handful of earnings out there, but nothing very. All the interesting stuff is kind of done. I'm looking at Chewy and PDD towards the end of the month. As I said, I think it's kind of a nice stock pickers market. I'll be looking for kind of these pockets of heavy flow, whether it's bullish or bearish directionally, and then trying to kind of engineer some trades around that and then put them on and manage them.
And last but not least, Mr. Rock Lobster, sir, our poll, in case you missed it, in these troubled times, where are you allocating the majority of your portfolio? Cash, fixed income, equities, or commodity/crypto? A, what is your vote? So far, we have a vote for cash, A, from Uncle Mike, and then C, equities for the Flowmaster. Where do you fall, Mr. Rock Lobster? B, where do you think our audience falls? And C, what are you keeping an eye on until our next episode?
Yeah, I definitely have a little more in cash right now than normal. But that's, it's just, but I think everybody else is going to say cash, to be quite honest. And what am I keeping an eye on? We've got Powell's going to speak, and the average move was around 1%, either up or down at least, or more over the last 4 sessions. So I think we could, we could see some fireworks there. So we'll see after 10 o'clock, maybe 11, if he he does some Darth Vader-like speech and freaks everybody out, we'll see what happens. But I think, that's definitely gonna be a market mover, no question.
All right, it's all the market movers we have in store for us today, listeners. But before we go, let's go back around the horn, see what everyone has cooking that may interest you. Oh, by the way, our poll right now, listeners, equities winning 36.6%, cash right behind it 34.1%, fixed income 19.5%, and bringing up the rear, commodities / crypto 9.8%. You got about 1 day left, so if you're listening on the podcast, get over there at Options, make your voice heard. And Uncle Mike, where should they go? What should they do if they want to get more Uncle Mike in their lives? Maybe let their voices be heard by you, sir.
Check out my website, stcharleswealth.com. If you're looking for a financial advisor, and follow me on Twitter, at Mike Tosaw, TOSAW.
All right. And Mr. Rock Lobster, same question for you, sir. Where should folks go if they want more Rock Lobster in their lives?
Go to optionpit.com, 888-TRADE-01. Talk to our customer care team, 10% off anything you have here, or go to Money Map Press. I currently, I believe, have one of the best performing products over there. So that is Weekly Profit Cycles. So anyway, check either one out. And that's great. You guys have a good weekend.
There you go. That is great indeed. And last but certainly not least, Mr. FLOWMASTER, where should folks go if, I don't know, they want to hear your data every morning on their smart speaker, or get your emails or your alerts, or kick the tires and light the fires on all the cool products you folks have to offer over there in CBOE land, sir?
CBOE.com/RMA, which stands for Risk and Market Analytics. You can see all the platforms and all the data sets that we have. You can request a trial, and you can always, follow me on LinkedIn or something. And I'm about to put a pretty nice analysis of the Johnny John Kenview tender and how that all worked out.
There you go. So keep an eye on the FLOWMASTER on Twitter. Of course, visit CBOE.com/RMA and listen for the dulcet tones of Henry's data when you're listening to your briefings in the morning. That's going to do it for us here on the old OB. Don't worry if you want more analysis in your lives, and who can blame you? If you're listening to Live Hangout, we'll be back in a little bit with Twifo. I'll be joined by our good buddy, Mr. Dan Gramza, to break down all the action out there in the futures options side of the fence over there at CME Group. And spoiler alert, there's a lot, so it should be a fun one. Back again tomorrow, noon Central, 1 p.m. Eastern for volatility views. After that, exclusively for you cool cats and kittens in the secret club over there on Options Oddities. And then back again next Monday, another episode of the Option Block. Stay safe out there, everybody.
The Option Block is brought to you by CBOE. When it comes to trading volatility, trust CBOE, the creator of the VIX Index, for in-depth and relevant information. CBOE's tools and services gives you up-to-date trade insights, analysis, and positions of VIX options and futures. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/VIX today to learn more. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.